Mike, it's good to have you. Welcome.
Thanks, Kelly. Thanks for having me.
So a lot of those are, I mean, this is the challenge with your sector right now, right? I mean, you own the biggest stuff in the market, multi-trillion-dollar companies. Do you just let it ride? I mean, do you see anything else that can really move the needle for you guys for the next 12 months?
Yeah, well, the answer is yes, of course. When you see what's at the top of our portfolio, but we have, very significant investments in companies that are less household names, whether it's a Zoom Info, a HubSpot, Ceridian Software, that, also really influence our long-term returns.
Can those companies ever get to the size and scale of the major players, or was that a one-time 2010s phenomenon?
Listen, I don't think it's a one-time phenomenon. When you're talking about a company reaching $1 trillion market cap, or some now at $2 trillion, it's very, very hard to do. But as long-term investors, we try to find companies that can grow faster for longer, that they have a significant market opportunity, and they have sustainable competitive advantages such that they can capture that market opportunity. We think often about companies that have second or third acts. They have multiple TAMs. And the great companies of the world, the Apples, the Microsofts, the Googles, they all have that. Tesla and NVIDIA, they have that. And even smaller companies, they have the same thing. They may have smaller opportunities than the Goliaths, but we look for companies that can do it again and again and again and keep that growth going for longer. Because when you think about the best growth investments, literally over the last 20 years, these are really companies that could grow faster for longer. Remember, Amazon started out as a bookseller.
Right.
No one expected they would be what they are today.
Yeah, a cloud giant and all the rest of it. Why isn't Facebook on this list, or Meta, sorry?
There were definitely some issues with Facebook that are really, hard to figure out exactly where they will go. So, where they are in, the public, where they are with regulatory issues, the impact that IDFA will have on them. And so we have significant investments in, what I'll call digital advertising, digital media. We just don't have an investment in Facebook today.
Understood. Two more specific names I want to ask you about. One, obviously, is Tesla, because it's pulled back below 1,000 a share. And I wonder if you think that makes it an attractive entry point, but also if you think there's any chance they can grow anything like what they've done, compounding to investors over the past decade.
Listen, I think they're going to grow at a very, very fast rate for a very, very long time.
Wow.
We've been investors for Tesla at Barron since 2014. We've earned 25 times returns on our investment. So, the stock is up 40% year to date, even with this pullback. We definitely believe, and you guys have had Ron Barron on your show, that we believe the stock could be a $2,000 stock in years to come. And that is just on, selling a lot of cars. That doesn't even include the option of what autopilot and autonomous driving can be, what they could do with solar and battery storage, what they can do with things like robo-taxis and controlling those kinds of fleets. And so we see a lot of options in Tesla. And as you look over the next several years, they are going to sell as many cars as they can sell. They're going to continue to innovate on the battery technology. They continue to innovate on autonomous. And we've essentially crossed the chasm. We've moved from an ICE world, sort of combustion engine world, to an EV world, and Tesla will be the leading player in that
Sell
world.
as many cars as they can make, really. They and all the rest of them, probably.